Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Matt Gillis of Clean.io coming to us from Baltimore, Maryland. How's it going in Baltimore?
It's beautiful. Fall is here and the leaves are changing colors.
I have never been to Baltimore. I really want to go, mainly from watching The Wire, although you'd think The Wire might scare people away a little bit, but that Absolutely. Is one of my favorite shows on the planet. And the city looks fascinating, looks cool. Are you from there or did you move there?
So the Wire is not too far from our office, actually. But no, I'm not. I'm actually from Toronto, Canada. Moved down here about 20 years ago. So, it's been a place where obviously I've started my family here and built my foundations here. And so now I've obviously got a pretty broad network down here. But if you like crab cakes, it's a great place to be. Climate's pretty good. You kind of get all four seasons, but you don't get much snow. And it's a great place to build a company.
I do like crab cakes. I'm counting down. There are exactly 21 days until Dungeness crab recreational fishing season opens here in Northern California.
Right on. So
ready for that. Picking up the boat from the boatyard in about 2 hours from now. So getting
very good
for crab cakes. So I'll have to come out for.
Dungeness are very different though than the blue crabs you get here in Maryland. The blue crabs are solid. Like they're sweeter and anyways, we're not here to debate who has better crabs, right? But Dungeness is a lot different, but you got to do what you got on each coast, right?
I don't think I've had the blue crabs, so that'll be something to look forward to in some future. So what brought you to Baltimore and what keeps you there? What attracts you to Baltimore? What are the pluses of being a startup founder in Baltimore?
Well, a girl brought me here and a job. And so, I came down to work at Verizon Wireless back in 2003 in the early days of the mobile internet, of all the things that you could do on your phone besides make phone calls. And so, I was on the digital content team where you would download games or ringtones or all those sort of things in the early days of digital content, long before the iPhone. So that's why I came and obviously, stayed and built a family and been a part of a few different startups since I left there. So did a video game startup and we sold that company to a Japanese, video game conglomerate called Capcom. And then subsequently joined Millennial Media, which was a digital mobile ads platform. And we IPO'd on the New York Stock Exchange. So that was a fun ride on that one. And then we ended up selling that company to AOL, which had just been acquired by Verizon. So I ended up back at Verizon. So it's been a wild ride. And now I'm leading this company called Clean.io. We're a cyber security company and we protect digital engagements. So they all kind of stitch together. You asked why Baltimore is a great place. Listen, to build a company, there's tons of great talent here. Proximity to great colleges and universities. Obviously proximity to great talent, specifically on the cyber side, obviously in the DC area, DC metro area. And in the digital media business, which is one of the areas where we play right now, there's been a whole bunch of great companies that have been started out of Baltimore, starting with ad.com way back, and then, Millennial Media and Videology and whatnot. So it's been a great place for many entrepreneurial ideas to really plant seeds and have success.
Okay, interesting. Cool. Yeah, I was going to ask if there's sort of a focus of the startups in the area, but I guess the cyber makes a lot of sense, and media advertising.
Yeah, cyber and ad tech are kind of two, and that's actually one of the intersections where Clean.io is. So it's a natural fit that I came here and joined this outfit.
All right, so explain what Clean.io does.
So we protect digital engagements. One of the biggest places where we started was this publisher ecosystem. And you probably are familiar with the experience, Nathan, where like if you're on a cell phone and you're scrolling and then all of a sudden it redirects you and says, congratulations, you won an iTunes gift card, or congratulations, you've got 39 viruses on your phone. We'd like to help you get rid of them. Mm-hmm. That's called malvertising. Basically, it's malicious advertisers who use the open programmatic media ecosystem to access you as a consumer and try and have an engagement with you. And so Clean.io has started in preventing malvertising. That's really where we focused. It kind of rears its head as malicious JavaScript that executes at runtime. So that's what, the cyber angle to this thing is that it's, the bad actors have out innovated most of the folks that have tried to solve this thing in the past.
Mm-hmm.
We're about 3 years old. We're venture backed. So we just raised our Series A, which I think we're going to talk about. It's an exciting time to be in the space. So many different macro conditions going on with, elections and COVID and all these times create opportunities for bad actors to kind of use, their skills to infiltrate these ecosystems. So that's the first ecosystem that we started in.
Interesting. So, without getting too deep into the technical weeds, because I'll quickly either not understand or lose interest. I'm just kidding. But without getting too deep into the technical weeds, is it something that you're selling to the carrier networks, the advertisers, or consumers? I guess where do you fit in that ecosystem?
None of the above.
Okay.
So we actually we work with the publishers. So think of any of the websites that you would go to on a daily basis. Most of those websites have advertisements on them. And what we do is we protect those websites and in turn their end users from those malicious experiences. Right. And so the only person, like if you think about whose responsibility is, obviously as an end user, you want to make sure you're protected. But ultimately, at the end of the day, when you go to, pick, the New York Times or the Wall Street Journal, pick your property, you truly expect that property to make sure that you have a flawless user experience when you're there. And that's what we help deliver, is a flawless user experience. And we preserve the revenue, because the reality is if you were to be on one of those websites and you get one of those malicious ads, normally you would go to a website and read 3 or 4 different stories and you'd spend 8 minutes there.
Mm-hmm.
If that site is under attack with malvertising, your time on site will go from 8 minutes down to 1 minute. Right. That means that instead of serving you 42 ads in your session, they'll actually only serve you like 4. And so there's a serious revenue loss opportunity for folks that don't decide to treat this problem. And not to mention, gosh, what a terrible user experience. So it costs a lot to create content. It costs a lot to acquire users and have people come to your site. It's really about protecting your user experience and your brand reputation.
Makes sense. All right. So bear with me for a minute how I ask this. A lot of content sites, I read the article, I'm drawn into an article, I read the article, below that are sort of like suggested other articles, usually from that publisher. And then often in very subtle line, there will be additional articles that are very clickbaity, but they look almost like real articles. Are you attacking that portion? I don't even know what you call those sort of clickbaity articles that almost look real. Yeah.
I mean, I think I would call those maybe like a content recommendation engine or something like that. We protect everything, right? So, the reality is the opportunities for these malicious experiences to happen can come from anywhere. So they can come through ads. They could come through compromised, Chrome extensions that sit on your PC. There's a whole bunch of different ways that bad actors can get code and kind of interrupt your experience. And so anywhere where there's that opening, that's what we protect. So we're a single line of JavaScript. We sit at the header of the page and we're analyzing behaviorally at runtime all of the events that happen on the page. Mm-hmm. And when we see a McDonald's ad, right, this one's probably not from McDonald's, but it looks like a McDonald's ad. Mm-hmm. Basically, the bad actors will use real brand creatives. Last weekend, they were using LinkedIn ads. It looked like LinkedIn. But once that LinkedIn ad renders on the page, it starts to do a few nefarious things. And so what we do is, because we're the first thing that fires on the page when that page loads, we're analyzing and looking for those events. And when those events happen, we chop them off and prevent the malicious experience.
Cool. Yeah, that sounds good. All right. Let's talk
money.
Let's talk money. How much you guys raised over how many rounds?
So we've raised $7.5 million. We raised $2.5 million in a seed, I would say last April-ish. So April of 2019. And then we just closed, I think it was in June, July-ish, a $5 million Series A. Cool.
Let's go chronologically. Let's go with seed first. When Was that just a collection of angels? Was that venture funds? How'd you put that round together?
Yeah, it was interesting. My lead was a seed fund out of Montreal called Real Ventures. The partner that we worked there with is a gentleman by the name of Alan McIntosh. And I had known Alan for, I don't know, maybe 15 years, since my early days at Verizon Wireless, actually. And so, when it came time to raise money for the seed, I actually pitched very few people. We really tried to focus our time and our energy and try and get money in the door with people that we trusted, that we knew that would challenge us, and help us. So Alan wrote the lion's share of the check, and then we had a bunch of angels and others involved in the round as well.
Okay. I pitched Real Ventures. I don't know if he's still there. Sylvain Carlisle. Sylvain?
I think he's there. Yeah.
He's still there. I really liked him. I didn't get him over the finish line, but you meet all these investors. Some of them you want to pull a Vanilla Ice and drag them or hang them over the balcony like Suge Knight did. Others you really like and want to hang out with them more and more. He's one of those guys.
Yeah, you know what? The whole crew there is awesome. I would highly recommend it. If you're an entrepreneur and you're looking for for money, which most entrepreneurs are, Real has been an amazing partner to us. And Alan was actually he was on my board at Millennial Media as well. Okay. So so long history and work together and that sort of thing. And sorry, I'm working from home today, so you can hear my dog in the background probably.
That's right, chasing away someone's. Cool. Let's go to the Series A then. That was, I think you mentioned before this call that you had kind of initiated that prior to COVID, and then COVID hits. Maybe talk about putting that together and, where had the company grown to in between seed and Series A? Yeah,
the Series A was fun and scary all at the same time. We've had rocket ship like growth here. I've been very fortunate that we found product market fit very early on with this thing. And quite frankly, we had product market fit. We had $1 million of ARR like before we even raised the seed. So we kind of bootstrapped this thing to really start to get traction. And we have invested every nickel that we had into basically product and tech. So when it came time for us to hit the ground and go out and raise the A, I was super confident in our numbers and super confident in our strategy and kind of what we had done. Yep. And so I had said, like, let's do this in February. Let's go out and have a banner Q4. And, end of February will be the perfect time. We'll spend, the first 8 weeks of the year building the deck and the materials, and we'll hit the road at end of February and probably have this thing wrapped by, mid-March. 2 weeks in San Fran, 2 weeks in New York, and, we'll have our pick. It didn't quite go like that. So I had maybe, like a dozen meetings lined up for New York for the last week of February. And as you know the story, right, the VCs, I think, were probably the first to close their doors. It really felt like VCs were the most proactive, and probably rightfully so, because they're the ones that are this parade of international travelers and people who are sneezing into their hands and then shaking your hand and saying, "Hey, great to meet you. Let's go have another coffee." Mm-hmm. And so all of my meetings got canceled. And so I was like, geez. Now, I think you'd ask, like, what are your regrets? Like, my regrets were staying heads down in Q4 and really crushing on the numbers and not going out and doing all of the coffee meetings and all of the really foundation building that I probably should have done the prior quarter. And I mistakenly thought that, oh my God, my numbers will just do all of the talking for us. And then we got hit with COVID. Mm-hmm. And so the reality is I then ended up kind of picking up the round at the end of March. Was when we we let everybody reset for a couple weeks. And as you probably know, everybody was like not sure how they were going to operate or how we would even evaluate deals. And God, VCs, how do you actually give money to someone if you've never shaken their hand or seen their office, right? Yeah. So we went through. We started at the end of March, and I pitched, I don't know, maybe 35 VCs. But I severely leveraged every network I had. Like, we didn't really go cold into anybody, but I went in cold, meaning I had never met 95% of the people that I pitched. Never met the person. so that was the process. And I think it was interesting because obviously at the same time I'm trying to figure out what this new world order looks like. So too were everybody on the other side of the table. And I think many of them were, I would say, quite sophisticated in how to deal with this. I would say the smaller firms like really kind of nimble and figured out how to operate. And others were kind of like in listen only mode. It felt like, like would kind of give us all the information and, we'll give you our answer. And the answer is like most of them hadn't really figured out how to invest in this new world.
How did you change your either pitch or approach? Once you took a couple of weeks to reset, then other than working your network heavily to really go at it, any other differences of approach? Yeah.
The pitch didn't dramatically change. Obviously you alter your pitch with feedback and as you go through your first few, you get very similar questions and, then hopefully you have the answers before the questions get asked on the next one and that sort of thing. So I think that's the refining of the pitch that for me worked.
Yeah.
I think really, like your time is precious. The energy is precious. Like it was really hard emotionally, I would say, the process. Like, and I think raising money is an emotional and exhausting process. And if it were the normal way, I would have been, on the road, sleeping in hotel rooms, running from meeting to meeting. But you would feed off of that energy that you get in those rooms.
Sure.
And what was interesting to me is, so like when COVID kind of lockdown came in March the 10th or so, whenever everybody really shut down, our office shut down and I started working from home here. And I was here 5 days and I very quickly realized that like raising money from home with 3 kids at home, doing homeschooling on Zoom. And then when they're not on Zoom, they're on Fortnite and Netflix. And so they're destroying your Wi-Fi. It's not the most conducive way to raise money. And so I actually went back to the office after a week and so I was largely alone in the office the entire fundraising process. And that also is, as you can imagine, an emotional experience because, you when you get told no or whatever the answers are, you got to get up and brush yourself off, but you don't have anybody to talk to. Normally, if you're on the road doing a road show, you're going to sit and, commiserate with whoever you went on the road show with.
Sure.
So,
yeah. Right.
So an interesting process, but, we had multiple term sheets, which was cool. So we got to pick our path. And we very fortunately landed with Tribeca Venture Partners out of New York. Chip Meekum is the partner, and I feel I'm glad it's behind us and that we can get back to work and focus on the real thing that matters. But I feel like we got a real partner and someone who understands our business. And what was interesting is we were their first investment in COVID as well. So,
yeah.
So, like it was kind of that experience where you're like, you're both trying to figure it out together. Like I had said to Chip at some point during the process, because by the way, we still have never met.
Yeah.
And he wrote, the lion's share of the check for this last round. Not to say that we didn't do an enormous amount of diligence and we weren't on video a lot. And, they did, front door and, back channel references and, and all of the above. But I had said to Chip, hey, like maybe we should just meet somewhere on the Jersey Turnpike, and maybe at like, exit 6A and just do a selfie together and celebrate this because it's a big accomplishment for both of us to figure out how to build that trust that we're going to get in this together. So proud of it.
Yeah, that's interesting. Well, so a couple follow-up questions I was going to ask, like, did you feel that, or how I was going to ask, how did you find the venture fund that was willing to, because right when you were doing it in March, April, almost everyone, you heard of almost no one writing checks, no one actually doing new deals that they hadn't already been in process with. So I guess, was it just simply a matter of some thawing in the market or, VCs kind of getting back to a new normal? Or, I don't even know what the question is here, but how did you identify someone to write that first check, to be that first check?
The folks that we had term sheets from, they had investments in adjacent spaces. So they I think they already had a very clear understanding of our business. and our models. It was interesting. I can tell you, like, the pattern of the folks that said no, like they basically said to me, like, everyone who we're writing checks to, this is our third or fourth meeting.
Yeah.
And we've been meeting them for the last 2 years. Right. So like,
mm-hmm.
So I think like the hardest part as a CEO who's raising money is like, balancing that time between the business and, the future of raising money. And I think, like laying those foundations and being precious with your time, but really investing in that, I think will make it easier down the road. I also think that, when I look at the folks who we did receive term sheets from, if I compare my LinkedIn networks with their LinkedIn networks, we probably have like 150 connections in common. And so when so when the rubber meets the road, and I think when a VC is serious about the business and they believe in the TAM and they're like, hey, like we like the market that this company plays in, then I think it comes down to like, who is the horse that they're betting on? And I think, the folks went out and did a ton of diligence, and, and I've invested in my network. I've invested in relationships for my entire career. And so I think that helped.
Yeah. That's great. With Chip Meekum, how many Zoom calls did you have before they committed? I think this might be an interesting data point.
I think it was, it was interesting. I think our first call was probably, right at the end of March and maybe early April. We were probably 60 days to sign the term sheet from first meeting, but and lots of calls in there. And I think, to be honest with you, a lot of it was, if you remember back to March, Wall Street kind of went off a cliff at one point. Our business was changing. The customers that we sell to were being impacted. I think the reality is I think they wanted to be as certain about this deal as I wanted to have certainty about the deal. And that's why I think getting to the term sheet signature probably took that long, which was, let's do as much diligence up front with each other so that, I'm not going into a no shop and you're still, figuring out if you really want to make this investment. So I think we did a ton of like business and personal diligence on each other leading up to it. That left basically legal diligence remaining.
Around that time period, there was a lot of discussion about how valuations are probably going to take a whack, across the board kind of thing. Terms are going to get more onerous. Did you experience any of that? Like, did you? No.
Very, very, like, I mean, listen, we had multiple options, right? So it wasn't a fire sale by any means, or we weren't desperate by any means. I think we, just like they're seeking the right investment, we were seeking the right partner. And so, no, I think it was very fair. And I think we're happy where we all landed. And, we now have the gas in the tank to, cover us for the next, call it 18 months, 2 years, and, and really dig deep and now accelerate the product market fit that we already had.
Okay. Interesting. Yeah. That's great that it didn't come to that. There seemed to be this theory that VCs would use the opportunity to really get some great deals, basically, right? But I guess if there's a competitive deal, that goes out the window. So
my mentor always told me that a good deal is a fair deal, and everybody should feel good about it at the end of the day. And that's how you have long-standing relationships and partnerships. I've always operated in my career that like there really shouldn't be a winner and a loser to a deal. And so I feel like we ended up in a great spot, and we've got an awesome partner. And by the way, everybody else who was with us before all came aboard for the ride as well. So, we brought in one other major, which was Interloop Capital, which is Justin LaBelle out of Baltimore as well. So we brought some local money as well.
Okay. You mentioned, just to get a little bit tactical for a second, you mentioned the no shop clause. Just for anyone not familiar, can you explain that concept?
Yeah, I mean, basically you're signing a term sheet that allows, a window of time for you to kind of get to closure. But during that window of time, you aren't allowed to keep selling yourself or, keep entertaining discussions with other folks. So you're basically committing to each other that for the next 30 days, you're all both going to put your heads down and get your lawyers together and sign the definitive long form agreements that need to get signed and negotiate all the terms and that sort of thing. So, it's just a time pressure for both of you to really commit to each other.
Got it. All right, good. Let's see here. Standard question, anything you would do differently other than maybe start your fundraise back in December or January or something, if you were doing this all over again? Any other advice we haven't covered or things, advice you would give your slightly younger self?
Slightly younger. I mean, I would say like always start earlier. I think you can never underestimate building those relationships, again, because you're asking people for money. I think usually relationships are built over time and trust and breaking bread or having a drink or a coffee. Yeah. So I think the more you can do those sort of things now, and by the way, the new world isn't really conducive to that right now. So, I think you got to rethink the whole model of, how do you build these relationships? Now, the crazy part is as soon as we announced our raise, I think I've had outreach from about 600 VCs. It's almost like every VC waits until they see the news and then they're like, holy shit, we need to get these guys on our radar. So the inbound of VCs has been actually quite active since we raised money. So it feels like they're all looking to make sure that they're well positioned to be able to have an opportunity the next time around as we move to the B or the C. I think, starting as early as possible. I think investing in your network, try not to go in cold to any of these places if you can.
Mm-hmm. Yeah.
Look as to who knows who, because I think that's more important than ever right now. And I've tried to help other entrepreneurs, with intros into where we've got friendly relationships, because everybody needs help in this new world. So I think it's start early and forge those relationships and use your LinkedIn. LinkedIn was key for me. I'd be dead without it.
Interesting. Was it simply a function of, hey, I want to get to know this investor. Let's see if I have any mutual connections to ask for that intro, or were you doing something else on LinkedIn?
No, I mean, so a few things. Obviously, like when we raised our seed, I brought in a whole bunch of angels and a bunch of successful angels who actually were CEOs of companies themselves.
Yep.
In fact, one of my angels had just raised a very big round from Google Ventures.
Okay.
And so obviously, having him come fresh off of his fundraise, he closed in January. He closed in January. I think he signed right before Christmas. He obviously had a very big Rolodex and at the very senior partner level, and he himself also had multiple term sheets. So he made me some great intros, mainly to West Coast VCs. Mm-hmm. And obviously I know a bunch of East Coast VCs just from my past. And I tried to be precious with time, right? You want to walk in and build those relationships with folks as fast as you can and ultimately get to know or yes. Yeah. And then, fast as you can.
All right. One last question. I'll let you go. You mentioned after announcing the round, you got, 600 or healthy number of VCs.
It's crazy, but maybe not that many, but a lot.
A lot come after you. So what do you do with them? Do you add them into a CRM? Do you send out a company? Do you add them to your distribution list for your company update? Do you start having Zooms with those guys, or do you just sort of file them away in your folder and in your inbox until you're ready to go raise money? How do you work that interest, that inbound interest?
I try and decipher the authenticity of them, if you can, right? Because I think some folks, I imagine, have got some scrapers that are just, pounding out the lead list emails. And
sure.
There are folks that I think have actually sent very thoughtful and engaging emails that demonstrates that they've actually done some homework on our business and they understand who our customers are and that sort of thing. To me, that is like the first level of like why we would, engage at all right now, because there's no need in my mind to start really deep diving on raising the next round, 2 years in advance. Mm-hmm. But yeah, so, I've had actually a couple Zoom calls with folks just to, start to engage and just get to know people. And then, you just kind of like set the, like, hey, let's, why don't we follow up 6 months from now? Like, and start to get a cadence going with a few of them. Ultimately, it'd be awesome if you can set yourself up so that you don't have to, go on a worldwide roadshow 2 years from now. And if you can as efficient with your time as possible and do the diligence now. It's almost like hiring, right? Like you start interviewing people before you actually need to hire them. And then when you're like, oh man, I need a head of sales or I need a CMO, then you've already got them already in the backpack. They're ready to join you. So I think that's key.
I like it. All right. If people want to learn more, it's clean.io, correct?
You got it. Yep. Clean.io. And if you want to send me an email, if I can help any of your listeners, Matt at clean.io, just hit me up and happy to help in any way.
That's great. I think it's so important and wonderful how founders are pretty good about helping other founders out, especially on the fundraising trail. We're trying to foster more of that through Foundersuite. So thank you for putting that out there into the universe, and good luck and enjoy your weekend.
I appreciate it. And I apologize for the Fortnite I got going on in the background here. It's a raging game they got going on, but they're all on headsets and chewing up the Wi-Fi.
Is it so my kids are on Roblox, and Roblox, I realize, is going public soon. I was telling my wife, like, maybe we should try and get in on that, because these kids are so addicted to these games. It's like, until they find the next cool game, right? But it's amazing. You're right. I came from the video game business. People used to spend max $50 on a video game. Yeah.
I think in the days when I was growing up, it was hockey cards and baseball cards. That was like the collectibles and the hobby thing that I spent every nickel I had on. And these guys will spend every nickel they have on this game. And it's all about buying the suits. They call them the skins and whatever. I think he spent $100 on this game already. By the way, he's 7.
I love it.
Yeah.
We're in the wrong business, my friend. Okay. Very good. Matt Gillis, thank you so much. And have a good weekend.
It's a pleasure. Take care. Enjoy the boat. Go get some Dungeness.
Wait, one more question. When's Blue Crab season start?
I think Blue Crab, they say, obviously I'm not from Maryland, so, but I think it's any month that doesn't end in an R, I think is when you should eat blue crabs.
Oh, interesting.
I think so. It's one of those things where you sit in the summer and you sit on a back patio with a natty bow and crack crabs and get cuts all over your hands.
I like it. Cool. Okay.
Old Bay gets right into your...
Old Bay. You're smelling Old Bay.
You got it.
On that note, thank you.
All right.
Bye.
Cheers, Nathan. Bye.